Selling options is overall better than buying stock. Option buying is similar to buying stock but more risky, since it's a time-constrained directional bet on a negative theta. Time decaying, wasting asset, or option sellers because time only moves in one direction. Theta decay is our friend. Income from selling options goes immediately into our trading account. The increased account balance enabling option rights against more underlying stock than we otherwise would have owned if buying only the stock. Selling options better leverages portfolio capital, turned over more often via numerous short-term expiration trades, whilst for a stock investor price can only go one way to profit. For the option seller to profit, price can go nowhere, or either way, within reason to the downside. But the worst downside is buying lower price stock, this after having collected premium income that further reduces purchase price. That is, owning stock significantly cheaper than the buy and hold strategy stockholder paid for it. Owning stock is to expect to make an average 8 to 10% per annum inflation-adjusted return. Or the stock buyer must believe they have what it takes to beat the market, which professional money managers can't do. Studies show the average stock investor actually averages 20% less than the index return. That is, circa 6 to 8% actual per annum. Stock buyers don't know at what price top or bottom will be, when best to buy and sell, or how long they'll need to hold. Stocks can have large price moves up and down, but most stocks don't have large moves most of the time, missing the 10 best days in the market over the last 20 years. Reduced market returns over that time by over 50%. Large stock price up moves are infrequent and unpredictable. Stock owners have to take a long-term view, be patient, and hold through bad times, which is often too much of an ask in reality because we stock pick with confidence, optimism, and expectation, emotions which ultimately lead to actually underperforming the indexes. The most famous stock investor of all time averages circa 24% per annum over a very long term, which means retail stock investors are extremely unlikely to be able to beat that level of performance long term. Moreover, stocks have no theta decay and can only provide a low return as income trades, via dividends, 2.2% per annum on average, on stocks that usually don't appreciate much in value. However, the high IV and frequent range trending price reversion of growth stocks works very well for option selling. For ongoing monthly income, option expiry is baked in. A short-term trade duration, set at trade inception for the option seller. Stock ownership is buy and hold. Option positions are short-term and can be managed in flexible ways. We aren't the most knowledgeable or skilled at option trading. We simply have a trade with an edge in itself in the setup and trading it. We have less risk than owning stock, selling theta, where time decay works in our favor, accruing monthly 1 to 2 times dividend equivalents. Flexibility in position management, trades that profit through a wider range of market conditions than stock. Short duration trades that enable frequent portfolio capital turnover on compounding capital. Discounted buy and hold stock ownership as the worst downside outcome, a trading frequency that suits those who want more market involvement and or seek greater market returns. Not everyone has the patience, desire, or investing style to sit long-term buy and hold.